G'day folks, welcome back to the weekend review for natural gas and the ETFs. Now the charts are still showing a bearish momentum, and that retrace, that bullish retrace to the upside is still in play. We'll include some back testing as well. Make sure you don't forget, before you go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook as of today, April 26, for AI demand impact, the rapid expansion of AI and cloud computing is significantly increasing electricity consumption, positioning natural gas as a key energy source. For instance, Meta's planned $10 billion AI data center in Louisiana will rely on new natural gas power plants to meet its substantial energy needs. In terms of geopolitical events, geopolitical tensions are affecting the global natural gas markets. The cessation of Russian gas transit through Ukraine since January 1st, 2025 has tightened European supply, increasing reliance on LNG imports. Additionally, Iran and Russia have agreed on a preliminary deal for Moscow to supply 55 billion cubic meters of gas annually to Tehran, highlighting shifting alliances in energy trade. So starting off with the natural gas commodity price, we'll look at the monthly, we'll look at the long-term trends first. So on the monthly first off, it has actually broken above the moving averages, giving us a bullish momentum. Likewise, the CCI 150 is above its moving averages. But notice this month so far, I've got a big bearish candle and the CCI pulling back towards that those moving averages. So we might see a bit of a further decline on the natural gas price, further to where it is at the moment. On the weekly, it's already broken below those moving averages, giving us a bearish momentum on the weekly. But notice the CCI moving averages and the price moving averages are still pretty much facing upwards. They haven't turned down yet. So again, if they start turning down, we're going to see a lot more bearish momentum in the market. Now on the daily, it's already very strongly bearish. You can see there it's hit that resistance up there at 49.30 and broken down through those previous supports we had. And it's finally broken through this lower support at 32.16. And you can see there that the CCI is still dropping. Our CCI 1500 is also in a continuous downtrend, and that's just confirming a smoother trend to support the CCI 150 trend. So if we go to the intraday chart, looking at the 1 hour time frame, you can see here we had on our previous video, we had this bullish divergence, higher lows on the CCI versus lower lows on the price. Now since then the price has actually dropped. Remember the rule for the divergence, we don't trade these divergence, so you wouldn't have bought there definitely. You would have just extended it and closed out any potential short positions once you see a rise. And that's where we are at the moment. You see that rising on the CCI from that higher low there. So that was a bullish divergence versus the same period on the price chart. Now in this case, the price has dropped further, but notice the CCI is rising. So that could be the start of a rise from there. And in terms of minimum retrace level, if we draw a Fibonacci from that low, let's take it back to that high, take it back to a significant high, then the minimum retrace will be in that 23-38% target range. So it's a bit off that for the moment on the hourly, but again, we'll track that in the coming hours and see how far it goes. So, and also if you look at the test, let me just get rid of that Fibonacci, clean it up a bit. And I'll just hide these trend lines. So the back test I've started from this period back here when the CCI broke below the moving averages. Now the CCI 1500 wasn't turning down yet, so ideally you would have probably started taking short trades from this period just to confirm, but that could have been an early start, and I've put in the back test beginning at that period back there on a daily. So this is if you're trading on the 1 hour time frame going short. So the stop loss approach here, you can see there you would have been doing quite well until this period. So the take profit is 3% and the stop loss is 5%. So down to that period you would have done okay, then the profitability started dropping off on the stop loss approach. The average down method has done better than the stop loss approach, but again notice here you probably would have avoided and closed out your positions in that area there. So you can see that equates to this area on the 1 hour time frame, and you would have started taking short positions again from that point there, and that would have been, so from that point there you would have started taking short positions from that point, and you avoided going long during that period. Remember, we don't go against the trend, we make sure we're going in a direction of the higher time frame. So you would have taken predominantly short periods there and short positions there. So the average stop loss approach so far has gained 560, assuming you ran it through the whole period. and the average down approach has generated 3,740. But again, I'm not suggesting you let it run. You close it out whenever the daily hits that moving average range. So for BOIL, shows a similar pattern. In this case, we've got a bearish momentum on the monthly, still below the moving average range on the monthly. The CCI is not drawn for it there. It's not pulling up enough data there. On the weekly, that's also showing a bearish momentum. It's broken below the moving average band on the weekly moving averages on the price. But notice here we had a bullish divergence, and that's still bullish, although it looks like it's pulling back again on the weekly. On the daily, if I put in those trend lines, you can see there it's been hovering in that range, two declining diagonal trend lines, and the CCI is still very strongly bearish. It's pulling back slightly to the upside, but predominantly bearish momentum. The CCI 1500 is still also bearish to the downside. On the 1 hour time frame, again taking short trades predominantly only, and you can see there, similar to the commodity price, that since our last video, that trend line should have been extended there to the same period, and you can see there the CCI is still rising, and that could be the start of a rise as well for BOIL. So that could come back and retrace, and if we pulled a Fibonacci retrace from that low to that high, that will coincide with that descending diagonal trend line. So we'll leave that in there as a target area and see if it does bounce from there. We'll see if it hits that range. So for KOLD on the monthly, that's also broken below the moving average range, but notice the moving averages are very flat there, which indicates it may start turning further to the downside or upside. So it's a bit undecided in terms of the moving averages. The CCI is not drawn for the monthly. On the weekly, the CCI is already broken higher than that moving average range, so it's a slight bullish momentum, although I wouldn't call it bullish at the moment. Still bearish on the price chart. It's below the moving averages, although it's reached that moving average range. On the daily, you can see there it's actually come down and bounced off this support at 1621, and that was a result of this bullish divergence, higher lows on the CCI versus lower lows on the price. Now you'll notice it's bounced out off that, and looks like the CCI is still rising, and so is the price. So bullish momentum on the daily. So if we go to the 1 hour time frame, taking long trades only. Now this is a bit undecided here. We've got a bit of a sideways movement on the CCI versus a slightly rising movement on the price. But notice here again, if we extend that trend line on the divergence on the CCI, but also the price, you can see there the CCI is dropping off and the price is about to drop off as well, so that could actually pull back. And if I was to draw now this is a bit tricky here, you can actually take it back to that level there, and it's just about touch that 23% level, or back to that level, but I'd like to take it back to the significant low, which is probably there. So you might see a drop to that level there. So depending on what area you put the Fibonacci, I'm going to take it back to that significant low to measure that 23-38% range of a potential drop. Again, don't trade that. You want to go in the direction of the higher time frame, so don't go short. So for UNG on the monthly, that's broken below the moving average range after a slight false break to the upside of the moving average on the monthly. The CCI likewise is pulled above, but it was also pulling back as well. So it looks like it's weakening and coming back to a bearish momentum. On the weekly, it's already bearish, broken below the moving average, and the CCI likewise is broken below as well after being bullish for a number of years actually. We did have a bullish divergence there, and it's finally breaking to the downside. On the daily, again, it's been declining for some time now, since around the start of March, and the CCI is still dropping. A slight pull back to the upside on the last couple of days, but nothing too dramatic. Still predominantly bearish on the CCI 150 and the CCI 1500. If we go to the 1 hour time frame, the intraday, looking at micro moves, so bearish momentum, but we did have this bullish divergence from our last video. Again, so similar to the other charts, we want to extend that to that low point. A bit too early to call it as a move to the upside yet. You can see that's still pretty much in decline, although the CCI is still rising. So again, we'll just take it one day at a time. We might start seeing it rise from there. As soon as we start seeing a bit of a backward or a J shape there, then we might start drawing a 23% target range on it. So I won't draw the target range yet until we see that break a lot stronger to the upside. So if you're new to trading, we're now including a weekly video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The +1 videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. The one we just did just yesterday was creating indicators on TradingView, and primarily I use Pro Realtime. But if you're a TradingView user, hopefully that gives you some assistance in setting up the charts we use. So if you enjoy the content and help keep me motivated to keep doing these videos, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Think of it as sitting down with me over a cup of coffee. The last one we did was just posted a few hours ago. Thanks, and talk to you in the next video.